Hey traders, checking in on the stock market today. The bears do exist, and we are finally clearly pulling back on the daily time frames. We have some names leading the way to the downside, some names holding on better, and a lot to check in on. So the futures chart, stair-step pattern, higher low every single day, has broken. In hindsight, it's always easier, but if looking for a swing entry, that was it. Just wait for the low of the previous day to break. Momentum in favor of the bears at that point, saving a whole lot of frustration. And so now daily consolidation is underway. So we're looking at our retracement sizes. As we know, the last couple days we've been waiting for this consolidation to begin, and we can see that we still have a ton of space for this consolidation to potentially remain a bull flag. That being said, one factor for me that decreases probability a bit, again, still entirely possible, but for the hourly RSI to get that oversold, it's not your standard really strong uptrend. If it's really strong, you touch 30 and that's your low and you bounce and you see an hourly oversold bounce from that point. And obviously, a monster dump into the end of the day. The bears really followed through with it and drove it home. So we don't have the aggressive dip buying right when hourly hits oversold conditions. That being said, if daily EMA 12 support holds, bulls are in complete control on this daily time frame. So the next couple of days will be key. Do we see increasing bear volume? Do we see bulls quickly regain the hourly trend in their favor? That's now my guide, because the daily higher low will be set when the hourly trend changes back to the bulls. So right now, I would call anytime we bounce from here, we're just looking for an hourly low or high. It would have to be a big enough bounce to shape up an hourly trend change back to the bulls. So the burden is on the bears on the daily time frame to make this retracement size not possible to be a daily bull flag. The burden is on the bulls in the short term to regain the hourly trend and set the daily higher low. So it just boils down to how much retracement are we going to see before the daily higher low is set. Looking at the Nasdaq, it's the exact same story. Again, we had a tiny little bear break in there, so not officially a stair-step pattern every single day, but the consolidation is underway. The retracement is still very minimal at this point. Today was the most bearish day that we've had since the bounce started, so it's a notable day for us. But again, we got a lot of space here. Technically, if we're going off the 382 retracement, we could see another 3% drop and still be a possible daily bull flag. So we're watching the hourly downtrend. Hourly RSI bounced right off 30 a couple times, but couldn't find a low. We had some falling wedges in there. Falling wedge broke bull into the end of the day and then rolled over into the bear break. So bears have short-term control, but we are definitely scouting daily higher lows, and EMA 12 will come into the picture either tomorrow or Monday. Semiconductors started their clear daily consolidation yesterday, following through with it today. And again, we're going to keep in mind that there's a lot of names where weekly consolidation may be shaping up. So on the weekly here, we had clear resistance up at 290.35. We are under that, pulling back from under that level. And again, this was the potential inverse head and shoulders we'll be watching, where if we see any red next week, weekly lower high will be set. And then it's up to the bulls to confirm a weekly trend change for a prolonged shift in momentum. Tesla holding on really well. So because Tesla is it's the largest bull swing position that I have, it's been very easy to hedge against, I should say. And today's just a perfect example where Tesla in general is going to go, what QQQ does, it's going to magnify it in both directions because it's just a more volatile instrument. And I have been protecting it with a bit extra SQQQ for that reason. But on a day like today, Tesla's down 1.5%, and it did close at the low of the day, but it held on really well the majority of the day. But it's down 1.5%, and QQQ's down 1.24%. There are periods in time where a 1.24% drop on QQQ would lead to a 4% drop on Tesla. So again, bull flags on the table, tons of space to work with. Did not see hourly oversold conditions at this point, and hourly oversold is on the table for tomorrow. So if we see further downside, then we'll look for hourly oversold. And again, bull flag possibility, we've got tons of, we can pull back 8% and still be a possible daily bull flag. So it's just a question of what is the retracement size going to be before the bulls can regain the hourly trend back in their favor. I did play a little bounce here first thing, day trading. This was an example of, number one, just a really small trade because I knew I was about to leave the computer, just wanted a little win on the morning. But number two, recognition of bull versus bear correlation. So today I chose to play, I had no intention of trading Tesla for a bounce on the morning, but I recognized a bullish correlation. So Tesla hit a low of the day in the first 5-minute candle, and that low was 1082.52. We then hit a new low of the day, the third 5-minute candle, by less than $1. Look at QQQ. Here's the low of the day for Tesla. It happened right here. And then on this third candle, Tesla broke by less than $1. QQQ is following through very notably. So right then and there, I say, okay, that's a bullish correlation. Then the next candle, we hold the low, the fourth candle. QQQ's fourth candle keeps dropping, fresh low. Then the seventh candle, we hit a new fresh low on QQQ. The seventh candle on Tesla is a higher low. At that point, I was already in the trade, and I was in, it was a very quick flip, but I was in at 1084 once I recognized the bullish correlation, and I recognized QQQ's 5-minute RSI. That was a major factor, knowing that a short-term bounce is likely due because the 5-minute RSI is in the teens. So I choose the stronger name based off of the ETF's RSI. And again, I sold very quickly. I sold a third of it, 1087, because it was a little bit of a bigger position size than normal. It's important to keep on top of things because, you know, the position size that normally I keep a standard share size for names that I trade very often, but trading a certain number of shares for Tesla in the 800s is very different than up at 1100, obviously. So it was a lot more than the day trade positions I was taking on Tesla 2 weeks ago. So I exited a third real quick in the 1084s, maybe 1085s, and then the next two, the high of the day at that point was 1095. And so on the bounce, I sold right under the high of the day, anticipating that, essentially just being really cautious, saying, okay, well, if we reject from the high of the day, I want to be out. I got to be away from the computer here in 10 minutes anyway. So just a little win. I think at that point it was a 75% day maker and just a nice way to start off the morning on a day where I'm not going to be in the zone all day like I am Monday through Wednesday. But in the end, Tesla's scouting a daily higher low. Correlations have significantly improved my trading game. Just like XLF. My XLF short was because of a bearish correlation to the broader market on, what's today, Thursday? On Tuesday is when it stood out. I think I talked about that in the last video. XLV, inside bar bear break. Anything above 134 is a daily higher low. Clear resistance zone just under 139 with a little triple top up there. Watching the hourly, bulls need to change the hourly trend back in their favor for a daily higher low to be set. Daily uptrend's key because if we lose the daily uptrend, we watch for weekly consolidation. So financial sector, big bear followed through and again, just absolutely collapsed into the close. 15-minute RSI got in the teens, hourly RSI got in the teens, so crushed. If this was not a swing position that is factoring in my long portfolio, I would be scaling out of this position right now, but I'm just holding everything that I bought first thing yesterday morning. And again, it was a bearish correlation with SPY and QQQ that stood out to me, along with the bull flag confirming with zero follow through as to the reason that I'm in this swing position. And very glad that I got this position because again, that shifted my weighting to having a bear lean in my account. So as I've said in the past couple of videos, when daily consolidation begins, my goal is to have my account keep going up by having good bear exposure, knowing that I'm going to keep some Tesla and Facebook and MSOS swing because I'm going to give the bulls a chance long-term on those plays. So example for today was my bull swing positions were down a 2-day maker and my bear swing positions were up a 4-day maker. So that's exactly where I want to be. And then tomorrow I may shift that. If we gap down, I'm absolutely going to be exiting some of my bear exposure. But I'm constantly shifting. And just an example of another little shift that I did. Half of my SQQQ exposure, I exited on just a short-term bull pattern that was clearly standing out to me. And it was just a little double top or a triple top at this resistance level, and then recognizing an inverse head and shoulders pattern. So looking for the possibility that this double bottom were to hold and that were to mark the low of the day. On this pullback, I exited half of my SQQQ. As soon as this bounce started, I said, okay, if this 5-minute higher low is lost, I'm getting right back into that position. We got the bull break, recognized the lack of follow through, and I jumped right back in. So at that point in time, my weighting lean of my portfolio went from bearish, and then it tilted a good bit back towards even. And then I brought it right back to bear again because the bulls did not prove any follow through. But just want to give an example that I am constantly shifting the balance based on short-term patterns, mostly hourly and daily charts. But sometimes can't help it when there's a nice clear short-term pattern. So for XLF, I'm not a great day trader, and I am a really good day trader. I'm not a great swing trader. So this trade, if you look at the 4 ways you can trade, bull and bear day trade, bull and bear swing trade, my weakest of those 4 is bearish swing trade, which makes sense because swinging bearish comparative to swinging bullish over the last 10 years, you want to be swinging bullish 95% of the time. Maybe a little bit less, but you get the idea. So this is something I want to be practicing on, and very pleased with how this is working out, which goes right into the segue of our free ebook theme of this week, swing trading versus day trading. Click the link in the description or the comments of this video, and we talk about which is best for you and how to determine which is best for you and the different things to be factoring in when looking at these 2 different styles of trading. So I know that I'm constantly trying to improve my swing trading, and it's gone well over the last 2 years. Very pleased with the progress, but it's never-ending progress. IWM. So bull break 2 days ago, giving a lot of it back, and again, growth names more than any other sector have to be cautious of weekly consolidation. IWM on the weekly had a more convincing bull break than a lot of individual names, but we're pulling back towards daily support. If 203.03 breaks, it's definitely a red flag that weekly consolidation is shaping up. If we hold that level, it's a daily high or low. But what we have now on a name like this is a big enough pullback where aggressive bears are going to be looking to top fish the next bounce. So let's say the bulls do hold a daily high or low compared to 203.03, and they change the hourly trend back in their favor. An aggressive bear is going to top fish. They're going to enter a bearish play. They're going to put their stop over the high of this bounce and then hope the bears confirm a daily downtrend into weekly consolidation. So just looking at names that have pulled back more notably the last couple of days, ARKK is another example. Let's say this is our daily high or low. There is no indication that that's the case, but if it were, we could bounce 4%, 5%, and still be looking for a clear daily lower high. We can bounce 7% and be looking for a daily lower high. So bears, swing trade bears that were not aggressive and in on the move the last 2 days, that's the play that they're looking for. They're looking for names that pulled back significantly enough to create the space for a lower high top fish next time the daily time frame bounces. Baba's a perfect example. Look at what Baba did. It pulled back notably, just a daily high or low. There's the top fish. Grab the lower high, daily downtrend confirmed, weekly consolidation shaping up. And on the weekly, and this is your anti-FOMO lesson, we bounced 70%. Oh my God, the bottom's in. I'm never going to get a position. But when you're coming from a prolonged downtrend on every single time frame, you know we have to change the weekly trend if this move's going to see follow through. So a patient bull is just waiting for weekly consolidation to look for a higher low. Weekly EMA 12 is still resistant as it has been for the last 4 months. Inside bar is very likely after the close tomorrow. And then first thing next week, if the inside bar breaks bear, weekly consolidation underway, and we will scout a weekly higher low. From there, biotech sector, daily support 87.78, but we know on the weekly time frame, EMA 12 resistance, which has been the case for the last 4 months. And again, this weekly chart in itself shows me absolutely nothing from the bulls. Yeah, nice little bounce, great. We've done it before. We've done it multiple times, and it led to lower lows. Names that look like this have a lot more proving to do. You look at Apple, you look at Tesla, you look at Amazon. These names don't have nearly as much proving to do. They do need weekly trend changes, some of them. Tesla already has one, but it's a night and day difference. So again, I just want to keep, every day I'm hammering that in these videos, but hammering it home that the individual name and the individual sector are not created equal. There are very different setups out there right now with very strong names and very weak names. Certainly going to be watching Apple very closely to see if it forms a daily bull flag as one of our tech sector lead bull generals. Solar sector volatility is incoming. So this is something that technical analysis can help with, determining when volatility is coming. And I'm going to pull up an example here from the end of today, but it's essentially knowing when volatility is coming is important because it tells us when to pay attention and when to get ready. And that's where the opportunity is for traders in volatility. So I don't have to know the direction it's going to break either, but we can still tell when it's coming. So I know that volatility is coming here on the daily time frame. Why? Because we're either going to break a triple top bullish or we're going to lose the daily high or lows for a bear break. It doesn't have to be tomorrow, but sometime within the next 3 trading days, we will see a clear break from this range. I mean, look how long we've been in just this range between 77.98 and 73.82. So we've been trading within that range. Let's call it $4 for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days now. It's possible we form one more higher low and get even tighter into next week. But this helps us find trades. How do I know who I'm going to be trading? I want to be trading where the volatility is. So recently I've been day trading TLRY. I've been day trading NIO a lot the last 2 weeks. But I know that I can stick names on the back burner. I don't want to use that word, bad word, because that's a trade style. But I can stick them down, write it on a piece of paper. I know that volatility is coming to this name sometime soon, so I'm going to keep an eye on it and then trade it when that volatility comes. And so the example from today is I looked at QQQ on the 5-minute time frame and saw that the bull's only chance here was a falling wedge. And looking at the time of the day, knowing it's 2:30, and actually I have the resistance level here. So we're right here. It's 250. When did I say it? 240. So at 240, I say volatility is coming into the close. Why? Because it's extremely tight. We're going to break before the end of the day. The end of the day sees an uptick in volume. I didn't factor this into saying it, but it's the end of the quarter, and you see even higher volume into the end of the quarter. But it can get you prepared. I didn't say which direction we're going to break because I didn't know. We broke bull, and then we rolled over and broke bear. So it was a little something for everybody. But again, equilibriums are great for this as well. Just, you know, a tightening range is eventually going to break, so you know to be paying attention for that volume and volatility spike, because when volume and volatility spike, that means trading opportunity spikes as well. TAN, volatility is coming sometime within the next few days. CCJ, so I'm just walking up my stop every day, and if we break 2860 tomorrow, I'll be out. And that would be a daily lower high being set if that happens, and we would look for a tightening range there. But very similar candle to yesterday, and bulls held on just fine with some nice follow through. So that's just my game plan for the swing position that I have left. Just stopping out every time, anytime we lose the pattern of a higher low every day. TLRY, daily consolidation underway. I'm now watching the back burner for hourly oversold conditions. It has not happened yet, but I know I will be interested in it the next time it does happen. Ideally, it happens aligning with maybe IWM and QQQ getting hourly oversold tomorrow, so I can be looking for a bounce in everything, and knowing that I want to see the ETF helping the individual name here as far as correlations are concerned. So I know tomorrow I'll be keeping an eye out for TLRY hourly oversold conditions. We got support at 761, double bottom there, and then 725. So we'll see how it shapes up. My kind of bounce is hourly, 15-minute, 5-minute, all crushed. Give me all of those levels oversold, and I will begin scaling in for that oversold bounce play. GME is popping after hours. The Reddit name's on a split. Apparently, if you say the word split, it's bullish these days, but rock it up. It's wild. We shot up 20% on split news. So what did I do? I saw that, and I appreciate people in the chat room. Again, team game. I am not watching. I sit down to record this video. I am not watching the market. And someone posted in the chat room that this is happening. GME spiking. GME split. So the first thing I do is I look at AMC. Is it correlate? Is it going up with it? It is. Okay, great. I'm looking to short AMC. So I short the 1 minute bear flag right here. I just was looking for a 1 minute lower high to top fish 26.58. And my entry was 26.07, I believe. Not a great fill, but then just scaled out, exited half, 26.80, right around there. And then exited another half, knowing that I had to make this video and I wasn't going to keep paying attention. But that was just a nice little half day maker. And that is an amount of money that is in my pocket that would not be in my pocket without other teammates pointing out information to me that I can then act on. Nobody told me to short. Nobody told me to look at AMC. That's all on me. That's all my trade game plan and my decision. But they gave me the heads up. It's just a little alert. Hey, this is going on. And that's invaluable. We already looked at BABA. Oil, daily lower high very quickly set. 108.75. Biden's opening up reserves or something. Don't really care much about the headline, but we're watching 98.44 key support to see how tight we're going to get within this equilibrium. If we break 98.44, we zoom out. This is important. There are times where equilibriums fake people out because they're not paying attention enough to the longer term time frame. There are setups where sometimes a short-term equilibrium breaking in one direction or the other can lead right into a longer-term equilibrium. For example, if I'm looking at this and saying, all right, the daily's getting real tight, I know volatility's coming, so I'm going to short if 98.44 breaks. That may be a viable trade strategy, but you got to be cautious because if 98.44 breaks and we see no follow through into a bounce, that may be a weekly higher low shaping up for then a weekly equilibrium to play out for another couple weeks. I see that happen fairly often where it fakes people out because they're not watching the longer term. So it's entirely possible that a bear break here would eventually lead to a break of 92.20, but you have to ensure follow through because if it doesn't, it's a weekly higher low in a continued tightening range. That's an important lesson. It's a bummer that I just stuck it at the end of this video. I wasn't intending to talk about it, but that's one to write down. That's where people will get faked out the most on an equilibrium is in that scenario. Doesn't happen often, but it happens often enough to definitely be aware of. Do good things. Thanks for tuning in. Tomorrow's Friday, so we'll see you soon. Check out the free ebook. Do good things. I think I said it. Do it again. Japanese maple and elderberry are just starting to put their leaves out. I'm going to let the asparagus go their second year and not harvest them and let them get real strong for the next few years. Carrots and peas are sprouting. Rhubarb getting big.